Okay, good morning. And what we want to do today is we want to expand on the initial trial balance that we put in, or the opening entry. Came right off of Media Moguls, and I'll pop over and let you see this. Came right off of this Media Moguls trial balance. It's Exhibit 2, found under the content section of your class in Georgia View. And every one of these entries that we made was based upon this trial balance. So if it was a debit here under cash on hand, you had to put it as a debit on your entry for cash on hand. And the entry, of course, would have been over here, this Media Moguls entry. So let me just pop it up and open so you can see. The cash, there it is, 35,625. Then we had land of 250 and vehicles of 120. And then over here on the other side, we had accumulated depreciation vehicles of 73,125. So if I pop back over here, you can see that these are exactly the same numbers. Okay, just make sure that you're putting them in the right place. When you're done, you should have an entry that totals 818,125, and that's what you would upload under the first requirement for Media Moguls. It's this 930 2022 trial balance. Okay. Now, over here, we also need to have open Exhibit 1. And Exhibit 1, and again, if you haven't done this already, you should have created these following customers. And it'd be 120, the number would be 120-01 for this one, and 120-02 for this one, and 120-03, and so forth. And this one down here would start out with 205, I think is what I use, 205-01, 205-02. As long as you're in the 200 series and say under 250, someplace under 250, you're fine. Okay. But all of these will be set up in um, your chart. And so if I come back over here to Media Moguls and I look up here, let me back out of the journal entry here. If I look up here under assets, I see accounts receivable, Contrary, accounts receivable, Jerry's Motorcycle, accounts receivable, Jones, etc. And I assigned them 120-01. I think your original thing may have called for 120-A or 120-B. That doesn't matter. You can put it in either way. Um, I think I just decided to go later on with this 120-01 schematic because in the real world you wouldn't use probably an alphanumeric code. You just have numerics. They're just easier to work with. Um, so because you'd start out at 01, and if you had 5,000, it'd just be 5,000, 120-5,000 as you added customers or added on the case of the liability, if you added additional vendors. Okay, so what we're going to do is we're going to make these transactions now. At this point, you probably only have this single transaction here, the 818-125. So under transactions, when you look at this, you should have up here at the top, you should be able to see this more and add a journal transaction. And now we're going to start adding these transactions. The first one from your Media Moguls Exhibit 1 happens on the 1st of October. What? New maintenance truck. That new maintenance truck is the very first entry that we're going to do, and it's probably of all of these entries that we do, the most difficult entry. And so here where it says uncategorized expense, if you click on that field, you'll notice that you have a drop down. Okay. And when you use that drop down, what you're looking for under assets here for this new trucks are assets, what you're looking for is vehicles. So you should have something down here called vehicles. But in the vehicles, and then come over here to the right-hand side under debit, 71,500. That's the cost of that vehicle. Okay. Come down to the next line here where it says uncategorized income. You're going to drop it down the same way. Just click that field with your left mouse button, and then it should say uncategorized income, but there should be right here a drop down. And with that drop down, what you're looking for is the liability for the short term payable. And so that would be down here someplace, vehicles, note payable vehicles, current. Okay. And that's going to be a credit. And the credit, if I come over here to my Media Moguls um, spreadsheet and click on amortization schedule, what that first one is the total of this one, and this one, because that covers October, November, December. So this is your current. That's this is stuff that's due within a year. If you add those three up, you're going to get to this number right here, 1657.98. So I'm going to come over here for my vehicle note payable current, and I'm going to put in 1657.98. Okay? This difference that you see down here, this difference is the long-term portion. So add a line, come down, put your drop down, and you're looking for vehicles under the liability section. You're looking for long-term or non-current vehicles. So that's land, mortgage, non-current, notes payable, vehicles, non-current. And the reason we have to separate these out is because you can't do a current ratio without having your short-term and long-term, or your current and non-current assets segregated. So come down here and you're looking to put in this 69,842.02. That's the long-term portion. And now you notice that you have total debits here of 71.5, total credits of 71.5. The difference is zero, and since the difference is zero, I can go ahead and save that entry. Now, what I want to show you, just very quickly here, I'm going to come over and I'm going to show you the report now. And what I'm looking for is the balance sheet. These things happen on the balance sheet. And I'm going to come up here and I'm going to put, since we are working with the month of October, I'm going to put 2022-10-31 for the 31st of October. And then anytime I make a change, I have to update this report. When I update the report, now you see what I have here is all of the stuff that I had before, but I also have, when I look at the details here, if I look at the details, I'll see that I have down here vehicles 191,500. Well, if you remember, let me pop back over and show you. We started out with 120,000. We just bought a vehicle for 71.5. So 120,000 plus 71.5 is 191,500, which is reflected now in the new vehicle amount right here. Okay, and by the same token, what we did is we created some additional notes payable for the vehicle. Now you have 5426.21. We went back over to your trial balance and came down. You can see it was 3768.23. So it's a total of this one plus the one that we just did in the entry. So let's go back up to our accounting, drop down transactions, and we're going to do the next transaction on the Exhibit 1. And now these become fairly simple for the most part. On October the 3rd, we sold $1,500 of print advertising to Jones Building Supply on account. Well, on account, they're not going to pay for it right now. So this $1,500 has to go into accounts receivable. So if I come back over to Media Moguls, I'm going to do more, add a journal transaction. This is going to be on the 3rd of October. The description is sold print ads. Down here where it says uncategorized, again, just click on that field, and what you're looking for is Jones Building Supply under your assets. Accounts receivable Jones. Now, if you just had Jones Building Supplies, perfectly okay. It's probably better if you set it up as accounts receivable so that you know that under the assets, all receivables are assets. So there's that 1,500. Down here on the second line, what you want is your print revenue. So if I come down here and pull this thing down, past the liabilities, there's your income side. Billboard, podcast, print advertising revenue. It's going to be 1,500 on the credit side. And now you see that you have $1,500 in debits, $1,500 in credits, the difference of zero. Save it. Go back over to your thing. And you know what I'm going to do? I'm going to just kind of grab these right here like this. And I'm going to put a yellow background so that I know that I've done those. Okay. Paid Weatherly Office Supply, $300 for office supplies. Now, the fact that it went through Weatherly, that's not going to be the thing that you're looking for because it says paid. The only time we're going to pick up this as a vendor is when we're actually buying something from them on credit, but we're paying for it in this case. And so that happened on the 3rd. Come back over to your transactions, more, add a journal transaction. This again happened on the 3rd, so you have to change it. Because if you don't change it, you wind up with something missing from your either your income statement or your balance sheet or both. Okay. Bought office supplies. Office supplies is an asset. Um, maybe not in the real world. In the real world, we probably treat it directly as an expense, but because we're still working in the theoretical world and they, in theory, are assets, we'll go ahead and treat them as such. Plus, that follows your book. So you're looking for under the asset side, you're looking for supplies, office supplies are right there. The debit is 300. Come down to the next line and hit this box again, and you paid for them in cash because it says paid. So you know that it had to be paid in cash. And they give you cash on hand. If you created cash, fine. Either one, it doesn't matter. And in the cash section here, 300. And come down, since my balance is zero or my difference is zero, I can save this entry. Now, this is the first time I think that we have posted an expense. Okay, so let me come back over here to reports again. I wanted to show you how this updates dynamically every time you have a save. And here I'm just going to put in through, because none of the entries that we made prior to the October entries affected revenue or expenses. They didn't because those were closed and all we have is assets, liabilities, and equity on the trial balance. So I'm just going to put it in 31st of October here and update my report. And now you see, and I'm going to look at the details here. You see print advertising revenue of 1,500, and oh, that's right, we treat that as an asset. So you'd have to see that on the on the balance sheet to see that. I'm thinking about how I would normally do it, which is to take it directly to the expense. But if I come down here, here's your $300 worth of office supplies. Okay. And the reason I didn't have to do anything up here is because I have a 10/31/22 date. If I were outside of that time frame, I'd have to worry about changing this. Um, but notice it automatically updated for the $300 we just posted. I'm going to show you in a minute when we do an expense, which I think is probably the next entry that we'll make. So let's go back over to this one. And I'm going to highlight it so that indicates to me that I've paid for it. Bought business cards from Masterprint for cash, $200. And this one, what I want you to do with is I want you to treat this one directly as an expense. And here's the reason. Once you buy something from someone and it has people's name on it, you're not going to be able to take it back. That's different than a box of paper, an unopened box of paper that you can take back. But if you do something or somebody does something for you and you're going to put somebody's name on it, then it's only good for that one person, so you can't really take it back. Okay, more. Add a journal transaction. You paid for these directly, and this was again, I think, on the 3rd. As long as you're in October, you're going to be okay. Bought business cards. And down here, click on uncategorized expense. And now you're looking for expenses. And the expenses are down here. And what you're looking for ultimately is office supplies expense, which is this guy. Make sure it says expense at the end for $200. And the other side here is cash. And by the way, this is a way that you would handle the vast majority of expenses. There are some exceptions, and the exceptions are going to have to do with shoot, my mind just went blank. Yeah, I'm not going to change it. Oh, yeah, depreciation, amortization. Those are not paid in cash because they're not paid at all. They're just simply entries for the depreciation and the accumulated depreciation. That's the other side instead of cash, by the way, accumulated depreciation. So we're going to save that. Come back over to your Exhibit 1. And again, I'm going to just make this so I know that I've covered it. On the 5th, paid the Georgia Power electric bill for $375 in cash. Back over to transactions. Up here to more. Add a journal transaction. This is on the 5th of October. Paid power bill. And uncategorized expense, well, it's going to be utilities. Now, I don't know about this one, whether or not I created all the different utility expenses or just treated it as one. So we'll come down and see what we find. Just treated it as one. So there's the utilities. And let's see, what amount was I looking for? 375. Notice I don't have to put in a decimal here because I don't have any. It just automatically assumes no cents. And down here, I'm going to have cash, of course. Cash or cash on hand, whichever one you use to set it up. 375. Again, no difference. And again, you know, this is an expense. Here's your cash going out for it. That's the way we're going to handle the vast majority of these expenses at this point. Okay, back over. Have to check and see how well I'm doing on time here. Paid the Tifton Public Service water bill in cash for $90. Same entry. the same entry. Now, typically, what you would probably have is you would have a breakdown of those utilities. So it might say utilities power, utilities water, utilities natural gas. In this case, we didn't do that. So you just treat utilities as the amount each time. Add a journal transaction. This one's still on the 5th. Pay the water bill. Come down here to the uncategorized, click on it with your left mouse, come down here, and you can search for these, by the way. And see, I typed in the first few letters and under expenses. And this is one of the things you're always looking for. Is this an expense or is it an asset? What is it? Well, this is an expense for utilities. $90. Down here you have cash. That's the other side of that entry. $90. Difference of zero. I can come down and click the save button. Remember, if I don't click the save button, nothing happens. Okay, let me pop down to reports here just for a minute so that you can again see what's happening with the expense side of it. Again, if I come down here and if I put in this case, October 31 and update the report, now you see there's that 1,500 that we set up initially, right? Here's the 200 for the office supplies expense. The utilities, that's a total now of the $90 and 375. Add 90 plus 375 and you get 465 for utilities. Now you notice that the net profit, instead of being 1,500 as it was before we had any expenses, is now 835. Okay, back to accounting, back to transactions. Over to Exhibit 1. This is the one I just paid, so I want to make sure that I highlight it so I don't do it twice and I don't forget anything. Paid the Tifton Clean Fossils bill in cash $225. Now, this is going to be the same entry you just made, except it's going to say paid natural gas bill. Add journal transaction on the 5th. Paid natural gas. Uncategorized expense. Utilities. Pick it up right there from the drop down. And let's see what it was, 225. Drop down uncategorized income and you're going to look for cash again. And down here, 225. Again, notice now I have a difference of zero. I have to have the difference of zero. Otherwise, I have an unbalanced entry and it's not going to work. It won't add it to your, it won't add it to anything that you're doing. Now, again, here, if I were to look at this, there's your paid natural gas. That utilities now under my reports would be higher now by $225. Okay, back over to your exhibit. Okay, paid master print 375 for brochures for a client. Okay, now this is something a little bit different. You should have under your expenses cost of sales or cost of goods sold. And so I'm just going to take this directly to the cost of goods sold account. You'll find out in chapter 6, I believe it is, 5 or 6, that we have to actually have two phases to this entry, but for this particular one, we're going to take it directly to the cost of goods sold. And here's what's happening, just so you have an understanding of this. We're in the media business, so people come to us and say, I need you to create for me a brochure. So I go back to my office based upon what our conversation was, and maybe I bring up Windows, in which case I go to Word, and Word has a brochure template. And I just bring up the brochure template in Word, and I do up based on our conversation again. I do up a nice brochure with different colors and so forth. And then I go back over to the client and I say, what do you think? And they say, well, it's good. We like it. Okay. And so I then go back to my office. I contact my printer, and the printer says, well, it'll be $375 for the brochures. So I pay the printer, in this case, Masterprint. All right. And you'll see how that works on through the system here in a moment. More, add a journal transaction. What I'm looking for is cost of goods sold, and I think this was on what day? Still on the 5th. Paid for brochures. And down here, what I'm going to be looking for is the cost of goods sold. And so I'm just going to type it in and see if I can print cost of sales. That'll work. If you have cost of goods sold, cost of sales, any of those work. If you don't have it, you probably have to stop, go back to your chart of accounts, and enter a new item called print cost of sales. And our debit here was what, 375, if I remember. Credit's cash. I paid it in cash. 375. And save. Now let me see if this thing is handling the cost of sales correctly. It may or may not be, but I'm going to look right quick. Here's your profit and loss statement. Come back over here and update it as of the 31st of October. Update my report. And when I do that, now let's take a look. And you see that I have 1,500 here for the print advertising radio revenue. And down here, that's that 375 print cost of goods sold. And so what you wind up then, the ability to calculate your gross profit. Okay. And this works on down to where you have a net profit in this case of $225. Okay, so it's working just like it's supposed to. All right, come back over to your number 1 here, exhibit 1. On the 12th, we created some billboard art for Levinson Equipment, $5,000. Levinson paid one half of the bill in cash, and the other half is charged to their account. Okay, over the 12th. More, add a journal transaction. Now this one is a little bit different. I'm going to change this to the 12th, by the way. And sold billboard ads is in the description. And down here, I'm going to drop this down. And I'm going to go down until I find Levinson accounts receivable right here. Now it told me that they paid half of it up front and the other half on account. This is the half that's on account. Come down to the next one. Now the second part of this is the other part that you actually received in cash. That's for the other half. So we're going to have to add a line here. And now what we're looking for is billboard advertising revenue. Let me just see if I can type in billboard and see if it comes up. Nope. Could be under revenue. That's okay. I'm just going to go down until I find it. If you don't have it, you have to create it. But under income, billboard advertising revenue, 5,000. We got half of it up front. That's the 2,500. Half of it's on account to be paid later, and you have then $5,000 on the other side. The difference is 0. Come down, click your save button. Again, and this is something you may want to check for yourself. You go over here to reports for a second. Look at profit and loss. Up here, put in um, October the 31st and update the report. And now when you do, you'll see that now you have the 5,000 here for billboard, giving you 6,500 in total income. That was your cost of sales. Now you have 5235 in profit, which is simply this 235 that you had before plus the 5,000 that you just added. Back to accounting, back to transactions, then over to your exhibit one. And again, I want to highlight that so that I know that I've actually created that entry. Charged Mary Contrary Argument Services $17.50 for printed brochures. Okay. This is the other side of this. See up here when you um, paid master print $375 for brochures for a client. Well, guess what? That was Mary Contrary. So again, we created a brochure for her. We sent it off to the printer. The printer charged us $375 for it. Now it's our turn. We're going to charge Mary Contrary $17.50 for the brochures. So I'll come back over here, more, add a journal transaction, and this is on the still on the 12th. And so the brochures. So we bought them. We bought the printed product, and now we're selling them. All right. It was done on account. So we're looking for accounts receivable Contrary, or you may just have it as Mary Contrary Argument Services. Either one's fine. $1,750. On the other side, what we have is we have some print advertising revenue. So again, you'll come down to the point where you find your income streams. In this case, print advertising revenue. And up here, $1,750. We have a difference of zero. Once I put that in, hit the save button. See, this is really not that complicated. Just kind of think your way through it. What's happening here? Return $50 of office supplies to Weatherly Office Supply and receive cash. Okay. Remember that we treated this entry right up here. We treated that as an asset in office supplies. And this is a theoretical reason for doing it. We're going to turn around and carry some of those office supplies back. Notice there's a difference between regular office supplies. I buy 3 boxes of paper and only need 2. I can take 1 back. I can't do that with business cards. I can't say, well, okay, I used 100 of them, and so I need a credit for the other 400, because it's only good for you, for one person. So that's why we treated that directly as an expense when we had the business cards. All right, so what happens here? Well, let's go back to transactions. More, add a journal transaction. And this one's on what day? Still the 12th? Returned office supplies. Same thing happens if you go to Walmart and return something that you bought. Same kind of a difference. Now, in this case, what we get back? Well, they gave us some cash. They gave us $50 worth of cash. Now, since we don't have the asset office supplies, or we have $50 less of it, what I have to do is take it out of office supplies. So I go down here until I find my office supplies someplace. Office equipment, furniture, office supplies. And reduce that by $50. Because we don't have 300 anymore. Now we have 250. Again, I have zero difference. Save. All right, cooking right along here. Back over to your exhibit 1, highlight. That tells us that we've taken care of it. Purchased $500 of billboard supplies from Mike's Billboard Supply on account. Now, use billboard supplies for the debit entry. Okay? So, now Mike's is somebody that's our vendor. In other words, we're going to owe them. So here, drop down journal transactions, and we're on still on the 12th. I guess so. All right, still on the 12th, and bought billboard supplies. And down here, let's look under assets, see if we can find some billboard supplies. Right there. Again, if you don't have this account, you have to cancel out of the entry, go back, create an asset for billboard supplies, and then come back and do the entry. Debit 500. Down here for uncategorized, you're looking for the vendor now, the accounts payable. And so there's Mike's accounts payable billboard supplies. Difference of zero, save the entry. And remember, guys, I mean, you can stop the video just like any other video anytime you want to, and pause it and do the work, and then fire it back up again. Pay the office telephone bill to AT&T, $295. Back over to transactions. Add a journal transaction. I don't remember seeing a change of date. Paid telephone bill. Come down here and categorize the expense, drop that down. Now you're looking for an expense called telephone expense. And I want to say they had a bunch of them. So let's see here, depreciation vehicles. Oh, I think it's in telephone landline. It's $295. And down here you paid it, of course, in cash. And for $295. Again, we are always checking, make sure that our balance is zero. Click the save button. All right. Back over, highlight the entry that you have taken care of, and make sure that way you know that every time that you've done what you're supposed to. Okay, so I'm running out of time. So I'm just going to do one more, and it happens to be a pretty good one to do, and then we'll do a second video for the other components from down here forward. Okay, on October the 19th, Mary Contrary found a typo in one of her brochures. She agreed to keep and use the brochures, but demanded a 10% discount, which we allowed. Okay, so back over here someplace, when we sold Mary Contrary $1,750 right there, sold brochures to Mary Contrary. Okay, now what she discovered was that we made a mistake. And she said, look, I'll keep those brochures, but you have to give me a credit because I'm not going to pay full price for something that's defective. So we understand that, and we say, okay, no problem. Add a journal transaction. The original transaction was um, was for $1,750, issued credit is going to be the explanation. Now, so originally what we did was we debited Mary Contrary's accounts receivable and we credited print uh, revenue. Now, in a big business, what you're going to have is a separate item for returns and allowances and discounts and so forth. But for this one, we're just going to take it directly back. We're going to, in other words, we're going to reverse the entry. So you come down until you find your print revenue, and it's a normal credit when it's going up. We're going to take it down by $175. And we're going to reduce Mary Contrary's obligation to pay us by 175. Again, difference of zero, save it. And so what that means now is that we've given Mary Contrary $175 credit. Let's go back really quickly here to our reports. Come over here to your balance sheet. And let's see if we're looking at, here's Contrary. Notice it's not 1,750, it's 1,575, which is 1,750 minus 175. Okay, well, at this point, what I'm going to do is I'm going to stop. I'll pick the rest of this up later. Um, so for me, that just means that I'm going to have to um, get out of this particular application and then load this video up at a later point today. So I'll see you a little later with the second section.